In today's video we will be analyzing the chaotic price action that happened yesterday in the euro-dollar. You will see how the fractal flow strategy would have protected you against the wild movements of the market. As it has already been pointed out in other videos, news events are partly blind mass psychology and part market manipulation. People see price moving fast and then they act by impulse. This is the perfect playground for large banks and very large traders to manipulate huge numbers of retail traders left, right and center. However, if you understand how the fractal flow strategy works, you know that this type of thing can be avoided, and you can be a third player in the middle of retail traders and large market makers. Let's analyze the chart and see how the trade you see opened was triggered. From number 1 to number 2 there is nothing special about price action. That's just a normal cascading market as you would encounter most of the time. From number 2 to number 4 we have new information to work with. Notice that number 4 surpassed the level of low number 2, and this made high number 3 a solid structure. From number 4 onwards, we begin to approach the moments before the news events hit the market. Number 5 is where the mind-twisting news happened, so let's unpack the events that created this particular configuration of price action. The huge bullish bar is where the market reacted to the news, so notice that two interesting things happened. The first thing is that this large bullish candle pierced the major high number 1. Right after that spike, price immediately went down, creating a candle with a massive upper tail. The logic behind this is that at high number 1, there were a lot of buy stop orders from retail traders because they believe it's a good idea to buy when price breaks highs and sell when price breaks lows. The amount of orders gets even larger at that level when fast-moving markets precede it, which is exactly what happened here. The spike is enough to trigger those buy-stop orders. Banks and large traders are not looking to help retail traders. They are just maneuvering them. When that cluster of orders gets triggered, a huge demand window is opened in the market, so it logically follows that there is a massive supply window that can be filled by those who have enough power. The supply window is filled even more violently than the demand created by retailers, and that's what causes price to go down and create that unusually large upper tail. The other interesting detail here is that there is a paradigm shift in the trend. Until number 4, the trend was going down because highs were being confirmed as solid, but the price vector between 4 and 5 changed that completely. Once price surpasses high number 3, the low number 4 is now rendered as solid structure, and low number 2 act as an axis to pinpoint the level of where the buyers from number 4 are sitting. In broader terms, the violent movement created by the news reset the market and flipped it to the upside. Notice that in number 6 and 8 price comes back and tests the low number 2 axis. Notice also that number 6 is a fractal bar that develops right after price touched the low number 2 axis, which is too perfect to be considered a coincidence. Between number 4, 6 and 8, we can see a upward sloping frequency line developing, and the long trade you see opened in the chart was triggered when price touched this sloping line and the horizontal low 2 axis at the same time, forming a fractal candle in number 9. On top of all that, between number 6 and 9 we have a second-degree hybrid divergence pointing to the upside. The trade was triggered at the open of the very next candle to number 9. The stop was placed below the solid structure number 4, and the target was placed at the level of high number 1, which is where the disaster took place for the retail traders. Being traumatized by getting wiped out by a long position at high number 1, retail traders will attempt to sell it this time, so this might be a good place for us to get out of a long position. This gives us a 1 to 3 risk-reward ratio, roughly speaking. Let's see what happened next. Here you can see that the trade hit its target with a small stop, a precise entry and a large take-profit target, which is exactly the type of trade structure that will enable you to be consistent in the long term at the same time that it will enable you to commit mistakes and still make money in the end. If you wish to learn more about the fractal flow strategy, visit our website in the video description to see testimonials from students and detailed information about the video course. If you enjoy these videos and would like them to continue in the future, please support the channel by clicking the like button, subscribing to the channel, and by leaving your comment below. Thank you for watching.